our speakers. So first we have Luke Baker from Climate KIC. We have Sarah Jones from Zero Carbon Capital. Hi, Sarah. We have Christoph Williams from Naked Energy. And moderating this session, a big thank you to Tasmin Lockwood from Business Insider. Here's your. Oh, you've got one. Okay. Yep.
Hello. Okay. Awesome. Thank you. Thank you for joining us, everyone. Thank you to Subak and Microsoft for having us and all of their sponsors as well. My name is Tasmin and I work for Business Insider. I cover climate tech and VC across Europe. Panelists, do you guys want to introduce yourselves? Okay. Turn it on.
Hello. Okay. It's a good start. My name's Luke Baker. So I'm the Capital and Investments Program Manager at Climate Kick. So Climate Kick has two main activities. We work with local and regional and national governments, looking at their net zero targets over different periods of time. On top of that, we also run around 8 accelerators across Europe, supporting the latest in climate tech innovation. We also work with universities around ideation across Europe as well.
Hi, I'm Sarah. I'm associate at Zero Carbon Capital. So we are a seed and pre-seed stage investor for science-based startups tackling big problems in climate change. So we are carbon focused and like I said, science-based companies, and we're looking for companies that will have significant impact in carbon reduction. My background is as a scientist, so I have a PhD in bioprocess engineering and environmental biotech. I then worked at Imperial College and then Oxford in their tech transfer offices. And then I was at the Creative Destruction Lab, where I led the climate program. That was an accelerator program for early stage startups. And saw ZCC working on this climate challenge with the focus on hard tech. And saw that that was a real gap, both in terms of the funding we needed there, and also in terms of what I'd been seeing, really strong scientists and innovators with hard tech innovation that needed to be supported. So joined ZCC recently.
Thank you. Great to be here. My name's Christoph Williams. I'm the CEO and co-founder of a company called Naked Energy. Naked Energy, we're really focused on what we think is probably one of the biggest challenges to climate change, which is decarbonizing heat. It's 51% of all the energy we use on the planet goes on heating and cooling buildings and process heat and industry. And unfortunately, 90% of that energy is driven by fossil fuels. So unless we decarbonize heat, we really aren't going to get to net zero or even carbon zero soon. But Naked Energy, we've developed a solar technology that produces heat and power affordably, and also generates 4 times more carbon savings and energy savings compared to conventional technologies. We've been through the funding journey. We've now raised nearly £15 million since we started the company, going through all the different challenges of capital raising, and if we look forward to discussing some of those today. Yeah, thank you.
Awesome, thank you so much. Yeah, I guess, Sarah, you touched on those changes a bit that you've seen. So if we just start with a broad question, we know that VC has seen significant changes in recent years, climate specifically. So what's the current landscape like, and what kind of changes have you guys observed? Do you want to start, Christoph? Just because your company was obviously founded in 2011, so you've been around the block.
Yeah, so to speak. So an overnight success, you might say. No, it takes time, and that's the thing. It's hard. You know, we to develop a technology that is patented, looks beautiful, works better than the competition. You have a global supply chain and a route to market. That doesn't happen overnight. I think the key thing when I started Naked Energy, one of the founders in the room who were looking to raise money, number one factor is timing. And when I started it, it wasn't long after the financial crisis. I think startups then, for venture capital, if you had a great idea, a proof of concept, or even a good pilot, institutional investors would look at you. That would be considered early stage. Now, early stage is you need $1 million of revenues, A-star team, and good traction in the market. So early stage definition has changed a lot. So that's one factor. And then another is the imperative for impact, carbon savings. I used to go into investor meetings, and there were obviously investors that cared about the climate and were sort of impact focused. But it was really, what's the business case? If I would talk about, look, we can save more carbon, it really wasn't the priority. It was more about what's the financial returns rather than the carbon returns. And that has changed because now there's a lot more investors. That's fantastic slides there from the keynote. We are experiencing a systems change. There is massive turbulence. It's not just the people in this room that care about the planet and climate, it's everybody now. There's a mass movement for this energy transition to happen at pace, because unfortunately those fossil fuels and that 90% I mentioned tends to come from parts of the world that create huge disruption. So it's happening, and I think investors are starting to see that it's a massive opportunity, that actually climate change and clean tech, because there were some big failures. That was one of the problems. There were some very big failures about 10 years ago, and investors got scared about clean tech. They thought it was going to be the next sort of dot-com growth and big boom, but clearly that created some challenges. So yeah, I think that's a summary.
Awesome, thank you.
Yeah, so I, from a perspective of a scientist who's sort of been close, and also with a father who's an ecologist and been close to the climate problem for a very long time, it's been frustrating for most of my life, really, to see how slow it's been for this to become a mainstream concern, and also how long it's taken for the commercial world to get on board. But now recently, in the last 2 years, it's incredible how fast-paced it is, that the commercial world and the public are all sort of behind this now. And I find that really, really promising and really exciting. But, as you were mentioning, there's this, the clean tech bust, and I think we don't want to get it wrong again, and we don't have time to get it wrong again. So has enough changed for us to not repeat the same mistakes? And are we approaching things differently enough this time? I hope so. And it seems, it seems to be going in the right direction. But yeah.
Sure.
I just had maybe the climate tech numbers in terms of investment seems to be reasonably resilient at the moment. We're seeing a drop off in other areas, and I think that's definitely positive. I think what we're also seeing, though, is certain sectors within climate tech, carbon capture, where you're seeing very elevated valuations. And I think that could be problematic later down the line. So, but I think overall, I think it's positive currently.
Yeah, just to respond to one of your comments about not getting it wrong again, and what is really clear is that the solutions already exist today. And that's one of the key differences. It's, there's talk about going for moonshots and radical ideas. We don't need to. It's the energy transition is about systems change at the top, landscape, I think it is, and regime. We need the policies, the financial and political will to say, right, let's just accelerate the deployment and change, make that transition happen quickly. And the technologies already exist. We don't have to, of course, there's going to be complementary innovation that happens and new systems that come along. But the core technologies to create a clean energy transition will improve people's lives, that have affordable, clean energy exists. So that's
fantastic, thank you. Sorry, Luke, did you want to chime in? So
it's probably worth just adding one more point now. I think that maybe, so we're half funded by the European Union, and I think there's certain things that are going on in that space as well, which are worth noting. The EIC now putting in blended finance into some of these companies that are struggling to scale. So I think there's that's creating support in the market as well.
thank you. So the next question actually is about the funding landscape, but I guess we already jumped into that. So is there anything else would you like to add, Sarah, and then maybe Christoph, just from a founder's perspective, like, are you looking to raise right now? What's the market like? Since we've heard some valuations are a bit inflated as well.
Yeah, I can comment a little bit from the sort of fund side and then the startup side. So ZCC is also raising actually. And so obviously there's been a little bit of a slowdown with the economic situation at the moment, but it seems to not have affected climate tech as much. So both in terms of raising a fund and then also if you're a founder raising, people are being a bit more cautious. You know, so be aware of that. You might need to be a bit more creative about how you raise. You might need to look at grant funding a bit more closely. You might want to rely on paid pilots a bit more if that makes sense for your company, and maybe some joint ventures. You know, do what makes sense to sort of tide you over. But it is interesting that this sort of slowdown hasn't affected climate tech as much. There's still a lot of money coming into climate tech. So we're targeting to raise a 30 million fund, and we have a third of that so far. Hopefully we'll close early next year. It might take us a bit longer because of this, but we haven't changed our target. We're still seeing that there's a lot of LPs out there who want to support climate tech funds and climate tech startups. So. Yeah.
It's interesting because when you're a founder of a startup, you think you're the only one raising money, but you're not. You know, the VCs themselves, you know, they're raising capital themselves. And yes, there's turmoil in the market. I think, as we mentioned, you know, look at the size of the capital that's being amassed at the moment, and some big names. You know, Fifth Wall raising $1 billion fund that's just closed. There's a lot of capital now still flowing into clean tech, and it feels like it's an energy vector it's almost like the train has left the station. We need to keep financing it. We need to keep financing this transition. And it feels like it needs a sort of holistic approach as well, not just backing certain winners. You need, you know, there's no single silver bullet that's going to solve this crisis. So that's good to hear that, you know, you're still ambitious and the funds are being secured. We've just done the first phase of our Series B. So we've raised 15 million in total so far. We've just done the first tranche of our Series B and probably going to be raising the same again to grow. As a business, it takes time. You know, I think that the message, you know, what's the funding landscape like? Yeah, it seems spooked. Clearly, there's, you know, massive inflation happening. You know, people are really feeling it up and down, you know, the country and the world. So there's uncertainty. But one thing for sure is that we have to transition. We have to change our energy system. We need to get off grids and gas and be more energy independent as individuals, as businesses, and society. So that's critical. So my message would be, in this current funding landscape, if you're looking to raise, is just, you know, the rule of thumb used to be it'll be 6 months from by the time you start to actually getting capital banked. That's going to take longer. So if you have plans and you've got a runway, make sure you leave that runway long enough, because it's going to take longer to secure funds.
I know just before we started, we kind of talked about the funding mix and whether grants come into play, project-based financing, that sort of thing. Have you guys got any thoughts on where people should be getting money from, if not VCs?
I'll comment and then I'll probably hand over to Luke, because actually they're on our cap table. Climate Kick, they invested us, I think, 2014. It's Climate Kick are a really interesting organization. So shortly after I founded the company, when you're a tiny little company with a massive ambition, it's very daunting. And actually at Imperial College, we met Climate Kick for the first time. We spun into Imperial, we did our first test there. And we met the Climate Kick, and they're an extraordinary organization because they're pan-European, they're a public-private organization, looking at climate mitigation and adaptation. And it's competitive to get in. I think the CEO actually put a slide up on Naked Energy at Davos once, which was, you know, a real coup. But we became part of the Climate Kick, became an affiliate partner, and went through their kind of accelerator program, which was fantastic. And we got some very early grant funding to really help just validate and prove the core technology. So absolutely, when you're at the beginning of your startup journey, finding non-dilutive grant funding is essential, I think, to really get going, because obviously the first round of angel investment and seed capital is going to really set you on the right path or not. So there's the IET is the kind of the umbrella organization, which is essentially the European Commission. And then there are lots of other pots in the UK. There's Innovate UK, which are very good. There's Bays, obviously. Within Bays are different grant applications you can go through. And where we were very successful was through a fund called the Energy Entrepreneurs Fund. And it has different stages. And we were successful twice with that. That really helped.
Thank you. If we could pass to Luke and then come to Sarah. I know you talked about a gap in later stage grant funding earlier.
I think I just reiterate the point I made before. I think governments are realizing that we need to see more scale capital going into these hardware companies like yourself. They're going to make the real difference over the next 10, 15 years. And so we are seeing more significant tickets coming out in grant-like funding. And that does make a huge difference to an organization like yourself, Christoph, in terms of your runway. Types of finance as well. I think if we look at the space, there's a lot of talk now around project finance as well, and how that comes into the mix with some of these bigger hardware companies. There's a lot of now startups that have big, high aspirations to like really transform different parts of the economy. And those later parts of finance where you're talking about debt, it's a very different game. And I think we are starting to start seeds of kind of a more joined up way of looking at financing across those stages, which I think is very encouraging.
Thank you.
So yeah, my perspective is from the VC perspective. And like I said before, we saw this gap in not enough capital for hard tech. And so, you know, that we saw that as an opportunity, and there's a little bit more, but I think we still need more, particularly early stage capital for climate tech, hard tech. And yeah, so more there would be great. And then we were sort of discussing earlier, you know, linked to your point on the project finances. So we fund these early stage companies and seed and pre-seed, and they'll get to you know, a pilot. You know, if this is a big industrial project, we can support them to a you know, a pilot plant, but then it takes a lot of capital. So we need much later stage funding to build the, you know, for a direct air capture or an energy transition kind of project. Large amounts of later stage capital is needed as well.
Thank you. So Christoph, you touched on this a little bit, just around sort of the need to obviously achieve net zero and change the system, I guess. But is that need enough to convince investors? So what kind of metrics should we be looking at when it comes to funding climate tech startups?
Well, the fundamental metrics needs to be carbon abated or sequestered, but carbon abatement is clearly the key metric. So pound invested or dollar invested per carbon reduced. I think every clean tech entrepreneur or founder, their ambition is to do something good with their business and ultimately help reduce carbon emissions. And so I think that's got to be the number one metric. Is this company, and I think it was Breakthrough Energy Ventures, one of their key metrics is we'll only invest in this company if you can displace 50 gigatons of CO2. So it's a big number, and that's, you know, on that kind of chart, that's at the macro level. That's really going to have a positive impact on reducing emissions. So you need, I think that's a key metric. So carbon abated, but also to do that, to be successful, there are so many people in the supply chain. So it's job creation is a really important one, and skills and training, because to deploy these solutions, it's not just software. You know, we're not going to solve climate change on software alone. You know, we are going to need hardware. That's going to need skills and training as well. So I think job creation, the types of jobs are really important as well.
Fabulous, thank you. Sarah?
Yeah, so at ZTC, we do have a metric, so similar to Breakthrough Energy Ventures. So we look for companies that we think can reduce carbon emissions by 0.5 gigaton per year by 2050. So really things that if they don't solve that problem, we won't be able to meet net zero. Those are the kind of companies we're looking to invest in. And that's for efficiency. So, you know, and different VCs will have different metrics. Some of them will look at different planetary boundaries. Some of them look at biodiversity. Some of them look at sort of oceans focus. But that's the focus we picked. And I'm particularly passionate about it. I think it's excellent. There are a lot of people looking at different things, but the urgency of this net zero goal that we have is just so critical. So I think it's important that we focus resources in that way where we can. Yeah, but of course, personally, myself and the founding partners of the fund, love it when there are other things that are solved alongside that. Sometimes, like the lady was saying earlier, with soil, when there's soil health linked to carbon sink, brilliant, and then the social aspects around all of it as well.
Yeah, I think the only thing I'd add to that, I guess Climate Kick at its heart is a systems change company. So as was mentioned earlier, we live in this complex adaptive system, which means by you putting in place a company in a certain sector, you're having knock-on effects. So when you start looking at carbon, as we've discussed today, you need to think across the value chain. What effect is that having, not just as a company, but across that value chain as a whole? And we do need to look past carbon. There is other elements that are super important, water, deforestation. And if we don't look at it in terms of a real system, we're not going to be having the effect that we want to have. We, particularly in the finance industry, often get caught up in kind of looking to measure everything, and it is incredibly important. If you don't measure stuff, you don't manage it. But being able to look at it across that entire system is mega important. It's not easy. If you're a startup, that's not something you can really get your head around straight away, but it's something that you learn from when you do try and think about your entire value chain and how you're affecting it. So I'd say that's just a really critical thing for people to think about and take away. It's not just going after that carbon number, which is mega important. We need to, by 2050, get to zero. But there are other super important things as well that affect that.
And then just on sort of impact, which you guys have all discussed, how do we go about balancing that with financial gain as well?
Being able to scale business is being able to scale impact. Those two need to go hand in hand. I think it's worth remembering, though, that there are a lot of businesses that don't fit into that VC model, and they can have a huge impact as well. They may not be able to drive those revenues that the venture is looking for, but they may be able to create real systemic change, whether that be behavioral change. And I think there's lots and lots of really interesting companies out there at the moment that are and do need funding, different types of funding that can have that type of impact. We do always look at technical change and what's the next innovation which can create that. But a lot of the stuff's already out there, as Christoph's already mentioned. But also there's small things that can make a big difference. We're working with local governments. They're massively under-resourced in terms of expertise, in terms of how you finance some of these things across cities. It may not be a VC viable company, but in terms of the impact you could have by upskilling those individuals with the budgets that they have, that could be significant in terms of that climate change impact. So yeah, I think we need to start to think a little bit past that as well and broader.
Yeah, so I, obviously, again, from the VC perspective, so firstly, I want to say I completely agree with that. And I love and fully support, for example, what Subak is doing and these varied models for supporting companies with an impact focus. At ZCC, we're using venture capital as a tool. So we're using that as our way of contributing to tackling the climate crisis. And our thinking is that the climate crisis is a hugely expensive problem. And so if you have people who are solving that problem, they inherently have value. And in some cases, that value is already clear with the improved efficiencies, etc. In some cases, it's not clear yet, and that's because we haven't priced it properly yet. But the value is there. If we don't solve this, it's going to get more and more expensive the longer that we leave it.
Thank you, Sarah.
Yeah, to have impact as a company, you need to survive, right? Because if the company doesn't exist, you're not going to have impact. And I'm sure probably a lot of people realize in this room that there's a thing called, or recognize the valleys of death. companies. You know, I've just discovered there's a fourth one now, and we're in that valley of death, and that's called deployment. So you go through all these different valleys, and yet there's another valley of death. So it's the execution phase of growing the business. You know, you've got a hardware, you've got customers, early customers, and you're growing. And so you've got to balance financial gain, whether that's revenues over grant funding, over getting equity or debt. You need to look at, obviously, try to get to that gross margin as quickly as you can, that positive gross margin. So you've got to look at your business and think, well, how can I survive? How can I grow sustainably? And you've also got to marry a very difficult curve, because you want to go quickly, because we don't have long. There's all this nice talk about 2050, 2030. We've got to do it this decade. You know, we've only got a carbon budget of 400 and something megatons, gigatons. And, you know, we've got to displace we're burning 40 a year. So simple maths, you know, we've got to do stuff this decade, which will be locked into future decades. So as a company, you want to survive, you want to grow fast. So you want to take on capital or try and scale and get revenues. And revenues are not necessarily the answer sometimes, because it brings other challenges as a business. So it's a very, very difficult path to walk as an impact company, climate tech company, is how quickly can you scale sustainably. And your ultimate goal is, for us, is to deploy on a global scale. So that has to happen quickly, and is difficult.
Awesome, thank you. So I guess just on that, but also taking a step back, what do you guys think that we could do to improve the wider climate tech ecosystem? Anyone want to start?
Holding the microphone, so I'll go first. Well, there are a few points have been touched on already, but I think investors, they need stability. Well, good luck at the moment with that, but I think they need strong political leadership to show that governments and institutions and financial institutions are setting the right direction. Then capital flows. It's really that simple. And because there's massive uncertainty, then there's investor uncertainty. So that is absolutely needed, because the money's there. You know, since the Paris Agreement, $3.7 trillion have gone into funding fossil fuel businesses. I mean, get your head around that. How does that work? You know, we're meant to be transitioning to a clean energy system. So the money needs to flow to the right areas, and just bring it down a little level on the venture side. We need patient capital. You know, it kind of goes against what I said, because we've got to move quickly. But I mean, patient capital in terms of the hardware businesses, the ones that can make big impact, they do need capital, and they need time to deliver on their milestones and deliver on their vision. So patient capital is definitely needed in the venture community as well.
Thank you.
Yeah, one of the things I've been thinking about is sort of watching where we're going. So there can be trends in the sort of tech space and in the investment space, and sometimes that, you know, that's great, and we're supporting things that are exciting and are going to make a difference. But sometimes we can skew our investments and our focus and leave some things behind that are important. So I think as a climate ecosystem, we need to keep checking what things aren't being supported and why, and making sure that those gaps are filled, particularly because of the sort of urgency of all of this. We had an excellent conversation yesterday that Amali hosted with funders and investors and people from, you know, very different perspectives, and I think those conversations are really helpful. So more of that kind of thing, so that we're not sort of siloed in our areas and our approaches. And then policy. So this seems to keep coming up, and it's not really my area, but it's, you know, you touched on it a bit now. I don't think we're going to solve this with business as usual. So we can't sort of rely on the markets as they have been, because it's so urgent. You know, if we were having this conversation 20 years ago, or even 10 years ago, you know, maybe we could rely on the sort of slow change, but you know, we can't. There has to be some significant incentives, taxes, and, you know, so we support startups that, you know, some of them, their customers, of course, they're interested in this new product, but it's a big thing to transition. Say you're an alternative to cement company. It's a big thing to convince that change. But if governments steps in and incentivizes that, it's going to make all the difference. So we're supporting these companies and doing what we can with the capital, but we need people on the other side who are going to make sure that that goes through. So I still think there's a lot to be done on the policy side of things.
I don't know if I had much more to add. Yeah, I think there's I think in terms of the VC space, I think there's obviously it's hot. There's lots of people trying to get into it. It takes a lot of time to get up to speed with a lot of these sectors. It's great to see you part of the VC sector, because we don't often see people with your expertise coming in and becoming an investors. And I think that's super, super important. But getting that level playing field, well, not a level playing field, but like a base level of knowledge to understand kind of what works, what doesn't work, what's the thermodynamics, like, will this stuff is never going to work, why have we poured 400 million into it? I think there's more work that we could do there as an industry, the VC industry can do potentially, and if you signal and signpost that's what governments need to see. They need to be able to see that, okay, for some reason the capital markets aren't able to provide the capital to drive the change we want to see. We need to step in. And I think that's, yeah, super important.
Amazing, thank you. And I guess, like, finally, so what advice would you have to founders sitting in the room today?
There's nothing really original I can say. You'll have probably had this conversation a million times. Take your time when you're thinking about reaching out to investors. Think about who you're going to reach out to first. If you're going after your VC that you really, really, really want to invest, I wouldn't advise it. You want to go through and you want to be questioned, you want to be pulled apart, you want to be embarrassed before you go and have that conversation. Think about what you need as you're moving into the future. Do you have all the skill sets that are going to get you there? Be humble as to what you can do and can't do. But have a vision. That vision is super important. That's going to be your guiding star. Yeah.
Yeah, that's all really great advice. And I'd also add that, so first, to actually reiterate that point on choose your investor. So investors tend to have specific focuses. Make sure yours is aligned with theirs, and make sure that your mission aligned. Your investors are people who will be with you, on the journey with you. Make sure that they're people you want to work with as well. So choose your investors as much as them choosing you, and then be so crisp in your story. So when you go and speak to an investor, don't make it difficult for them to understand what you're doing and why you're competitive. Deal flow, especially in the climate space at the moment, there's so much coming in our direction, and it's so much easier if we see a very clear story that pops out to us, and then we'll want to meet with you again. So really crisp storytelling will help you a lot. And then after that, be responsive, answer the questions, and just give as much information as you can to the investors so that they can understand and get behind what you're doing. Sort of don't hold back, and yeah, be as quick with your responses as you can.
Yeah, I think the key thing that's touched on there is do your research on the investors. If you're going out to raise capital, I wasted so much time speaking to some investors who I thought had capital to deploy. And actually, it's a common mistake. You're engaging with investors, they themselves are raising capital, and you spend a long time engaging with them, and you're learning about them, they're learning about you. But actually, they eventually say, well, we haven't closed our fund yet, but come back in 6 months' time. And you go, okay. So that's a big mistake we made. So, and most investors are very clear about the sectors that they're going to focus in, and what stage as well, whether it's seed up to A, late stage B. So you do your research on those investors, and have a thick skin. You're going to get told no a lot. You're going to be turned down a lot, more than accepted. But no is never really like a no, because what you find is take it humbly, take that criticism. Why did they not invest? Look at it, think about that, because investors, they are smart. They're looking for that solution, but they understand the challenges. So what was that critique? Take it on board, because those investors, they're still around in 6 months, 12 months time. You hit your targets and your milestones, and you're progressing, they monitor you, they watch how you're performing. So longevity is really, really key. Yeah, and just be really crisp with the story, because climate change is a big problem, but also it's a big money-making opportunity. So if you're very clear about how you're going to make money, because I think, you know, founders, clean tech founders might be sort of focused more on the social good, the environmental good, but actually, you know, impact investors want to have a positive impact on the planet, but also need to know how you're going to make money. And that sometimes gets lost in the pitch. You know, we're going to do good, it's profit for purpose, and this is how we're going to make the money.
Thank you so much. I'm keen to open it up to the floor, but if I could just tag on a rogue question. Just with you saying, you know, investors say come back 6 months later. I'm hearing right now that nobody wants to lead rounds. So if anybody in this room is raising and they've got a bunch of commitments for investment, but they don't have a lead yet, like what should they do? Is this something that you're seeing in climate tech as well?
So there are definitely funds who are willing to lead rounds. People might be getting this feedback because they'll be in such a specific industry area that the VCs they've spoken to might be general investors, and they want to find a fund that has expertise in the area. So that goes back to your point about doing your research and finding investors that fit you. I think it is really important to have a lead investor that understands climate. So either a climate tech specialist investor or a specialist investor in whatever the area is, the industry that you're working in. So I think that's really important. Yeah.
Awesome. Anybody else got anything to add? No. You don't have to.
Well, I guess if you've got a lot of interest and no one's prepared to lead, that's quite an unusual, I don't know, is that common at the moment? Maybe.
I think it's just the economic uncertainty, really.
Yeah, I think everyone's in this sort of, we don't know what's going to happen over the next 6 months and year. So I guess maybe in that situation, you've got to look to your existing investors and be really clear about what you're going to do over the next 6 months, and all those ones that are showing interest, just see if you can get commitment from them to say, right, if we achieve this, will you get that term sheet, get something signed from them that they can commit to, and get enough of a commitment, which would bring in ideally a co-investor, but then they're trying to get a lead investor then to take it to the helm.
Awesome.
It might be worth adding here that although ZCC is still raising our fund, we're already deploying the third that we have already raised. And we are absolutely open to leading. So, and a lot of the investors in our community are the same.
I set you up for a great pitch then, didn't I?
Yeah, I think it's a really good point. I think it's worth startup just getting into the mindset of what a VC is, how it works. Like, it's not that difficult. Most of them are for 8 years. So if they're deploying capital in year 4, and you think it's going to take 10 years to get an exit, it's probably not the right fund for you. And there's just certain other elements that just you need to know when you're reaching out to these guys, and ask them those questions. Like, they need to tell you that, they need to give you that information back, and it can be a very quick conversation. They may just say, look, I'm going to monitor you. And so, yeah, I think it's super important. I went out and fundraised. It was back about 4 years ago. It's a learning experience, and so if you can get into their mindset, that's really, really helpful.
Awesome, thank you. Are there any questions in the room? Then we've got 5 minutes. Just right at the back there, if you've got a mic. Thank you.
Hi everyone, Jana from Kind Community. What's been your favorite failure or failure that has somehow transpired into a big lesson or success?
I want to take that.
Got the mic. I mean, no, I suppose this is somewhat interesting. We are in, so we're in a time period now where last year I was working with an organization called Breakthrough Energy Catalyst, and what they were doing is they were going out and they were talking to a number of corporates, and we came up with a framework, and I started engaging with them and spoke to about 30-40 companies looking and talking about these emerging climate technologies we need to push the transition. The reality is, from all those conversations, that they're not deploying enough capital to do this. And I failed in terms of actually going out and trying to convince any of these guys. Maybe I planted a seed in their mind at some point, but it wasn't a success in those terms. I think it's a super interesting lesson. They are not nimble, these big companies. They're not able to make some of these bets. They do have huge capex, but they're so stuck in their own ways. And I think that's a huge opportunity for innovators across the UK, across Europe, to kind of really step in and take the lead on some of this stuff.
Thank you. Do we have any other questions? Gentleman there, sorry. Thank you. I'm just conscious of the time, so if we can maybe.
Hi, Rashid from UPage. I'm just wondering, when we're talking about systems change and transparency, you know, what it's a question directed to Christoph. Why haven't we thought about crowdfunding or kind of engaging the consumers, the individuals to that change? Because VC kind of funded approaches are very hidden and you don't know where the milestones are. So for people trying to understand that, how do we kind of engage with Naked Energy, for example?
That's a really good point. We did do a crowdfund 4 years ago, raised £1 million. It's not usual. So I think the key challenge is that there are B2B businesses and B2C businesses. And I think B2C, so for consumer play, crowdfunding can work really well. Yeah, because you're more engaged with consumer, the communication channels are much more direct. So crowdfunding for B2C can work really, really well. B2B, not necessarily, because it's just a very different model. I think maybe some businesses shy away from it because if you're not successful, it's a very public failure, maybe. So yeah, I think that's possibly one of the key challenges. But you think people power, get together, community, lots of small investments, and that's happening for sort of project finance, where deploy distributed energy assets. There's community funding. There's different aspects like that. But certainly for venture capital, you'd think, and there are some funds that are on a community level and people funded. So it's a good question.
Thank you. And then gentleman in the blue shirt.
Hi, there are a lot of blue ocean market opportunities around with mature technologies that can be used in different disruptive ways. And yet, a lot of VCs keep focusing on disruptive technology. Now, if you are reducing the risk by not innovating because you can use existing technology in a different manner, how do you make VCs understand that actually you can have a huge impact on carbon emissions by simply going into a different market rather than going to a different technology?
Sounds like that was directed at me. So it's not necessarily that VCs won't support things that aren't going to completely disrupt markets. It really just, so when we review startups, we'll look at their potential impact. And for a climate VC, that will be carbon impact, but then also its potential returns. So it doesn't have to be, it can be a huge impact in an existing industry and an improvement. But if that improvement is not going to make the returns that we're looking for, or isn't going to have the carbon impact that we're looking for, then we wouldn't invest. And then also, very importantly, the team, and looking at the team and believing that they're going to be the right people to execute on it. So I don't think it's the rule that VCs won't support that type of technology. It's just about reviewing it and seeing what the potential is.
Yeah, if they feel that it's defensible, your plan. I mean, it's really about like execution, particularly when you're looking at hardware. Like, do we really think this team has got 10 years, 20 years experience to be able to deploy this at scale, at speed, to take the market? And that's what you've got to convince everyone. It's obviously easier if you've got IP in there and that's all protected. It is possible, it's just harder. And I think this is a really good point, though, back to kind of what we were talking about before. Like, there are gaps where VC is not supporting where we need the market to go. And if we can be more transparent about that and provide better signposts to policymakers around this, I think it's super important. So good question.
Thank you so much. We have 1 minute left, so if there's a last minute question that this lady in the front there. If we can be super quick with these answers. Thank you.
Hi, thank you so much. I'm Leonie from MCJ Collective. You mentioned earlier, and Sally mentioned in her keynote, not having carbon tunnel vision. Yeah, sometimes the quantification of impact of a startup can feel like it only focuses on carbon, and that can feel the same coming from investors too, speaking from a fund myself. How do we quantify other impacts such as biodiversity? Do we need to do that in order to have a more holistic approach into the impact of our investments?
I'll hand it to you, Alfonso. So our press release is coming out next week. We have a new impact fund that's just invested in us, and they're a charitable foundation. And a key term of that investment is we have quarterly reporting now on not just our sales, because the more we sell, the more carbon we will abate, but also on our diversity, our training, it's indirect and direct training, and reporting. So we're reporting on other aspects of the business, which are just wider than just carbon savings. So I'll just add that as maybe that's a way that's got to be a structure that needs to happen for investors to get bigger impact rather than just sort of enterprise value returns and carbon saving returns.
Yeah, so despite my fund focusing on carbon, I do think that we should be looking at other metrics. So I was at a conference recently, a climate tech conference, mostly for investors and founders, and there was a big panel on biodiversity and how do we measure it. It's very complex. So carbon is obviously usually much easier to measure. So that's probably why that's been sort of the first one that people have gone for as a lower hanging fruit. Even carbon can be complex to measure sometimes, especially when you're looking at sort of soil carbon, that kind of thing. But yeah, there's definitely more to be done. And just because there's a focus on carbon now, it doesn't mean that they're not people. So there are funds out there. I mentioned a couple before, and some of them were at the discussion yesterday in Amali's group who do focus on other planetary boundaries. These do tend to be harder to measure though, but there are people working on it. And then there's the bigger question of, we don't yet have a carbon price. We probably should there be a sort of, and this is for a lot of people a controversial topic. Should there be something similar on biodiversity?
Yeah, I think we're at an early stage on this. Definitely. CDP, where I used to work, they asked all the big companies, and they measured deforestation, water, carbon. Like those are the three areas they're looking at. Where in the VC world, like there's a big focus, the VC world on carbon at the moment, needs to evolve, needs a more diverse group of funds that are looking at different strategies. People are going to take different approaches. So yeah, I think there's a lot of evolution that we're going to see over the next couple of years.
Thank you so much. Thank you for joining us, and thank you for your questions, everyone, as well.